Trading right around the $3.14 mark on the New York Stock Exchange, Lithium Americas Corp presents a classic market puzzle that standard financial media loves to oversimplify. If you glance purely at financial tickers and surface-level headlines, you see a pre-revenue resource developer burning cash while navigating a cyclical commodity trough. The headline narrative treats every drop in lithium spot prices as a death knell for upstream mining plays, prompting retail investors across trading apps to panic sell and write off the entire sector as a cyclical trap. But this broad-brush media framing completely misses the underlying geopolitical chess match and the hard physical realities governing North America's energy transition. The real story here isn't about short-term commodity price fluctuations. It is about absolute sovereign supply chain security and the physics of onshoring critical mineral processing. While retail traders are getting shaken out by macro jitters and temporary pricing pain, institutional heavyweights and sovereign entities are quietly engineering a fortress around the world's largest known measured lithium resource. Behind the scenes of daily trading volumes, a fascinating institutional accumulation phase has been playing out, sharply contrasting with retail exhaustion. As macroeconomic headlines focus on interest rate uncertainty and electric vehicle adoption rate plateaus, sophisticated capital is looking past the near-term noise. General Motors didn't inject hundreds of millions of dollars into Thacker Pass by accident, nor did the U.S. government structure multi-billion-dollar strategic financing and equity stakes just to gamble on a speculative junior miner. They are securing the foundational feedstock required to insulate domestic automakers and grid infrastructure from foreign choke points. Yet retail forums remain flooded with fatigue, wondering why a stock tied to the future of electrification isn't mooning right alongside software and AI darlings. Are you currently holding a position in raw materials and critical minerals, or are you sitting on the sidelines waiting for actual production milestones before jumping in? To understand why this asset commands such high-level strategic backing, we have to look past outdated historical framing. Lithium Americas Corp, in its current incarnation, is not a sprawling, unfocused junior explorer spreading capital across multiple volatile continents. It is a laser-focused domestic critical infrastructure play, anchored entirely by the Thacker Pass project in northern Nevada. Legacy mining narratives often assume long lead times equate to perpetual dilution and operational failure, ignoring the reality that breaking ground on a project of this magnitude requires navigating complex environmental, legal, and engineering hurdles once, and then locking in an impregnable economic moat. The physical reality of Thacker Pass is that it sits in the McDermott caldera, hosting a massive clay-hosted lithium deposit capable of supporting multi-decade, large-scale production. Transitioning this asset from raw clay to battery-grade lithium carbonate requires a specialized, highly optimized processing flow sheet, backed by state-of-the-art technical development centers, designed to de-risk commercial-scale output long before the plant stack is fully energized. Looking ahead toward the multi-year catalyst horizon, the narrative shifts from permitting and construction to mechanical completion and commercial ramp-up. With major construction milestones advancing, including processing plant assembly, crystallizer installation, and long lead equipment deliveries, the company is marching steadily toward its target mechanical completion window, setting the stage for initial production and subsequent commercial ramp-up. The technological gatekeeper positioning here is immense. As domestic battery manufacturing capacity expands under stringent local sourcing mandates, automakers face a severe shortage of locally sourced battery-grade lithium carbonate. By combining automaker joint venture funding with strategic government credit and equity alignments, Lithium Americas has built a resilient capital stack designed to weather commodity downturns that routinely bankrupt pure-play junior miners. Supply chain risks, capital expenditure cycles, and execution hurdles remain part of the equation, but the ultimate takeaway is crystal clear. Looking past short-term price noise reveals a rare macroeconomic choke point where national security, automotive survival, and raw material engineering converge into a single high-stakes infrastructure play. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.